Ladies and gentlemen, good day and welcome to the Rushil Decor Q2 FY26 earnings conference call. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Karan Bhatia. Thank you and over to you, sir.
Thank you. A very good afternoon and welcome all to Rushil Decor's 2Q FY26 earnings conference hosted by Asian Market Securities. From the management side, we have Mr. Rushil Decor, Executive Director, Keyur Kajar, CEO, and Hiren Bhai, CFO. I now hand over the call to Rushil Bhai for his opening remarks, post which we can open the floor for Q&A. Thank you and over to you, sir.
Thank you, Karan Bhai. Good afternoon, ladies and gentlemen. Welcome to Rushil Decor Ltd's earnings conference call for the second quarter and half year ended 30th September 2025. I would like to thank everyone for joining us today. I am joined by our CFO, Mr. Hiren Bhai. The investors' presentation has been shared with the stock exchanges and we hope you had an opportunity to review the material in advance. Let me begin by sharing an overview of our performance for the quarter. After the temporary disruption in the operation during the first quarter, I am pleased to inform you that our manufacturing facilities are now operating at optimum levels. The fire incident at our Andhra Pradesh MDF facility is well behind us, and the business has returned to full operation normalcy. In the MDF business, the segment delivered a revenue of rupees 1695 million in quarter 2 FY26. During the quarter, we faced external challenges such as a higher resin price and sourcing issues for raw material, which impacted the performance slightly year over year. However, the production resumed to the normal level with capacity utilization reaching 79% during the quarter. Domestic demand remained encouraging, supported by the steady activities in the housing and furniture market, leading to a 5.2% year-over-year growth in Indian revenue. Export revenue nearly doubled subsequently as the shipments resumed post-normalization of the plant operations. However, on a year-over-year basis, export volumes was lower, mainly due to shipment delays arising from the US tariff-related uncertainty and logistics challenges in the selected markets. On the realization side, we have recorded a 7.7% improvement year-over-year at the blended level, with both domestic and export realization showing a strong traction driven by a better product mix and disciplined pricing strategy. Value-added MDF products contributed 45% by quantity and 56% by value, reflecting our ongoing focus on a premium, higher margin categories. The segment's EBITDA stood at rupees 183 million with a margin of 10.8%. Moving to our laminate business, revenue from the operations was rupees 457 million in quarter 2 FY26 compared to rupees 503 in quarter 2 FY25. Export revenue grew by 8.9% year-over-year, driven by improved realization in premium product categories and expansion into the new international markets. The blended realization improved 4% year-over-year, supported by a selective price adjustment and a higher share of premium products. I am also pleased to share that Jumbo Laminate we have started contributing to our revenues, marking a key milestone in our growth journey. We have also commenced the trial production for our phase 2. Which adds an additional capacity of 1.6 million sheets per annum. With both phases in operation, we expect a meaningful scale-up in the production volumes and export contributions over the coming quarters. Furthermore, during the quarter, the company added 10 new direct distributors and over 40 retailers and dealers, further expanding its network. Continued participation in international exhibitions and customer engagements has helped widen the export base and enhance brand visibility in overseas market. On the sustainability front, We are continuing our plantation and agroforestry initiative across Andhra Pradesh and Karnataka, which ensures the consistent raw material availability while supporting the local communities. We have also initiated the plans for the solar rooftop installations across our manufacturing facilities, which will be further reduce our energy cost and carbon footprint in the long run. Looking ahead, we expect the momentum to sustain in the coming quarter, supported by the incremental contribution from the jumbo laminate facility, improved capacity utilization in MDF, and continued expansion in the international markets. We remain committed to disciplined execution, cost optimization, and strengthening our brand presence globally. That concludes my remark. I would now like to hand over the call to our CFO, Mr. Hiren Padhya, who will take you through the financial performance in greater details. Thank you.
Good afternoon, everyone, and thank you, Mr. Rushil. Warm welcome to all participants joining us today. I will now take you through the financials and operational performance of Rushil Decor Ltd for the second quarter and first half of FY26. A quarter marked a period of steady operational recovery as our business returned to normal levels after the temporary disruption at Andhra Pradesh MDF plant earlier this year. Production and dispatches have stabilized. Capacity utilization in MDF has reached 79%, while laminate operated at 90% utilization during the quarter. Now turning to the consolidated financials, revenue from operations for Q2 FY26 was rupees 2356 million, reflecting a 2.3% growth year over year and a strong 31.5% increase sequentially, supported by normalization of operations and improvement in realizations across both product categories. Gross profit for the quarter was 1059 million with a margin of 44.9%. EBITDA was 225 million, representing a margin of 9.5%, while profit after tax was rupees 51 million with a margin of 2.2%. For the first half of FY26, revenue from operations stood at 4148 million, lower by 8.9% year over year, primarily due to the plant shutdown in Q1. Gross profit for the half year was 1803 million with a margin of 43.5% gross margin. EBITDA for the same period stood at 203 million, while the company reported a net loss of rupees 89 million with the normal operations now fully restored. We expect performance to improve in the second half. Now moving to segmental performance, starting with MDF. Revenue for MDF segment in Q2 FY26 was 1695 million, a marginal decline of 1.3% year over year, but a strong sequential growth of 36.4%, reflecting a resumption of operations at AP facility. Domestic MDF revenue grew 5.2% year over year, supported by improved demand and better pricing, while export revenue declined 22.9% year over year due to external challenges such as US tariff issue. Despite this, export realization improved by 8.3%, demonstrating our focus on enhancing value in key markets. Overall, MDF EBITDA for Q2 was 183 million with a margin of 10.8%. Realization improved across the board with a blended realization up 7.7% year over year, driven by a higher share of value-added products, which now contribute 45% by quantity and 56% by value. For H1 FY26, MDF revenue was at 2938 million, which is lower by 13.8% year over year due to the production loss in Q1, while EBITDA was 110 million with a margin of 3.7%. Moving to a laminate segment, the business continued its stable growth momentum. In Q2 FY26, laminate revenue increased by 8.9% year over year and 22.9% sequentially to 547 million. Domestic revenue grew 8.8% year over year, while export revenue rose 8.9% year over year. Laminate EBITDA for the quarter was 42 million with a margin of 7.7%. Blended realization improved 4% year over year, with a strong growth in export realization, which increased by 10.7%. For the first half of FY26, laminate revenue was 992 million, up 1.2% year-over-year, and EBITDA was 87 million with a margin of 8.8%. On the balance sheet front, the company's net debt-equity ratio stood at 0.42 as of 30th September 2025, reflecting continued financial prudence. In October 25, we received a 114 billion from Government of Andhra Pradesh under the Industrial Development Policy 2015-20, which includes power subsidy and stamp duty reimbursement. To summarize, the fire incident impact is now behind us and operations have fully stabilized. While the quarter presented challenges such as higher resin prices and external headwinds in export, our improvement in realizations, higher value-added mix, and expanding distributor base have helped offset some of the pressure. With capacity utilization normalized and new capacity contributing to growth, we remain optimistic about delivering an improved performance in the second half of the year. Thank you for the attention. That concludes my remarks. I would now like to open the floor for questions and answers.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Resha Mehta from Green Edge Wealth. Please go ahead.
Yeah, thank you for the opportunity. So, my first question is on laminates. So, why would the export volumes have seen a degrowth, and what is the outlook here? Because as I understand, US revenues is very small for us. Hardly 2-3% revenues comes from the US. So, how would why has there been a degrowth here?
So basically, degrowth was because of two things. First was the resin pricing, again, because the resin plays a majority role in our laminate as a raw material. So we were able to produce it was like we did an evaluation that we go for a high value production first. So the value added products have played a substantial role over there, and we will be recovering that by this quarter as well.
I think I would like to add one more thing. As rightly pointed about Rushil bhai, see, when we are just having such constraint in terms of raw material, we have just a strategic move of deciding value-added products. So that is being reflected in our realization also. If you see realization in this quarter, it has increased in both the cases, domestic and export.
Okay. But it has got nothing to do with slow global growth or anything of that sort, right? The outlook in terms of global, export laminates continues to be good.
Yes.
Would that be the right understanding? Okay.
Yes.
And the other question on laminates. Yeah. Sorry, go ahead.
Yeah, go ahead, please.
Yeah. So, with the existing capacity that we already had, I'm not talking about excluding the jumbo laminate, the existing laminate capacity, what was the peak revenue possible here?
So typically when we see the production cycle of laminate, so we have a different product mix altogether. So capacity utilization wise, anything above 85% is considered as 100% and plus in laminates. So we are already utilizing the existing capacity at the best level possible.
So when we did around 200 crores revenues in laminates in FY25, so that is basically supposed to be the peak revenues for the existing laminate capacity, right?
Yes. So it may vary 5 to 10%, but yes, according to product mix, if we have a good value addition proportion going on at that point of time, so maybe 5% or 10% higher revenues can be achieved from the existing capacity.
And in phase 1, what would be our current capacity utilization?
Sorry, can you repeat the question?
For phase 1 of jumbo laminates, what would be our current capacity utilization?
It would be in the range of somewhere around 80-85%. No, no.
Okay, so it's almost close to optimum levels.
Yeah, we are already doing the existing capacity utilization at the optimal level possible.
When you say existing, I'm meaning the phase one, right? The phase one jumbo
No. I'm talking about the old facility.
Yeah. So no, my
Jumbo,
question is pertaining to the phase one jumbo laminate capacity.
yeah, so currently, if you see, we have all, for the quarter two, in quarter one, we have applied for all the required certifications which we require to export in the developed markets. And by September mid, we received almost the confirmation and certifications from all the required certification companies. So now on, the utilization from Q3 will be optimal on that level. Currently, the utilization won't be a higher side because of the certifications not in place. So the actual capacity utilization will be noted from Q3 and Q4.
So in one quarter, it is, I mean, in the same quarter in Q3 itself, it would be possible to ramp up to 80-85% capacity.
No. That
On
won't
a
be
quarterly basis,
possible.
not on an annualized basis.
No, that won't be possible to optimize 80-85% in Q3 itself, because it is subject to the customer side also. Because once we got those certifications, the first time consignment will be going to the customers in the countries. Once it is online, and then we can achieve the good growth in that. So it is all about the time. So Q3 would be an optimization of somewhere around 30-40%.
For phase one. Okay.
Yeah.
And what would be the exit capacity utilization, in terms of Q4 for phase one?
Now, for Q4, we are estimating around 50-55%.
Right. And even in jumbo laminates, the optimum capacity utilization is the same at around 85% plus?
Yeah, the technology and everything remains the same, so the optimal level is considered to be the 80-85%.
Got it. And what is the peak revenue that is possible from phase one and phase two for jumbo laminates?
So, it depends again. So if we consider according to the product mix, the average realization would be somewhere around 100 to 125 crores.
Okay. So what is the capex that we've put in for these two phases, phase one and phase two separately?
Together, we have kept the capex of somewhere around 100 crores.
100. And that should generate, say, around 200 crore revenues, both put together?
No, both put together would be doing the revenue of somewhere around 150 to 175 crores.
Got it. And this is possible to achieve by the end of next financial year, right? FY27
Yes.
by the end.
For next financial year, yes, it is possible to achieve.
Got it. And, the other one was in the MDF. So, are the thick and thin MDF capacities fungible?
So, currently our capacity altogether is 1100 cubic meters per day, out of which 300 cubic meters is from Chikmagalur and 800 cubic meters is from Andhra Pradesh plant. Andhra Pradesh plant has capacity to make MDF from 2 millimeters up to 30 millimeters, and Chikmagalur facility has capacity to make from 7 millimeters to 30 millimeters.
So basically it's not fungible, right? I mean, you can't manufacture thick MDF in a thin MDF plant and vice versa. Would that be fair to assume?
No. So in Chikmagalur, thin MDF production is not possible, but Andhra Pradesh plant is all advanced technology plant, so it is possible to make any thickness in that, and the capacity is already been utilized at an optimal level.
Got it. And in MDF, what led to improved realizations? Would there, price hikes, or what would that have been, or increasing salience of value-added products? And also, why was there a volume degrowth in MDF too?
So first answer is yes, the value addition proportion has increased, as well as the realization for the quarter has also increased. So our target was to achieve 50% by the end, value addition in terms of quantity by the end of this financial year. So we are gearing up and have increased this to 45% in Q2, which has added an additional revenue, and our realization has also increased subsequently for both exports and domestic. That was the first answer. Can you repeat the question for the other component?
And there was a volume degrowth in MDF.
Yeah, so there was a crisis going on the side of resin because of US putting tariffs on the Iranian chemicals, due to which the subsequent there was a price rise in resin, and which led to plant shutdown for a couple of days, because of which we were not able to produce the quantity, and we were not able to add that realization or that revenue to our top line as well.
Sorry, so there was a plant shutdown of the resin supplier, right? Not our plant.
No. We had to shut down the plant for a day or two because of the resin crisis.
Okay, so I mean, has the resin crisis, kind of cooled off, or is it still as bad it was in Q2?
No, now it has been coming back to the place, and we don't see any crisis coming this quarter.
Okay, and just a few bookkeeping questions. What is the tax rate guidance on an annualized basis for FY26 and going ahead?
That is 25.
25.
25 plus your surcharge, whatever it is. I think 20.
Including surcharge.
Effectively 27%?
No, it is around 25.
Sorry, 35%.
We have two options, so 30% and 25%. So we are just opting for that option, which is around 25%.
Yeah, 25%. Okay. And any update on the fire losses or the claim?
Yes, I think the insurance companies, government companies, you know better, the way they are just asking for the details, etc. So we have been giving complete details, and I think the way things are moving, maybe I think 1 or 2 weeks, we'll be able to file the final claim by this month end, definitely. And this claim would be on 2 parts. One is like loss of material, and second part would be the loss of profit. Both the policies we already have.
Okay. And lastly, what were the PVC and ply divisions EBITDA margins in Q2?
In case of PVC, the EBITDA margin was around 5 to 6% as of now, because earlier quarters, I think last year it was not good, but I think for the last 1 or 2 quarters it has been improving, and as of now it is around 6%.
And ply?
Ply is very minimal. The operations are very minimal, so it is not material, I think. And if you see our notes also, in accounts, as of now we are already having 51%, which we want to just reduce over a period of time. So slowly, gradually, we will take a call.
On the ply division, right?
Yes.
Got it. That's it from me. Thank you.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Keshav from HDFC Securities. Please go ahead.
Hello. Hi, sir. Thank you for the opportunity. Just want to understand one thing. What is the maximum capacity utilization for your MDF plant?
So if you see the utilization of our MDF plant, our Chikmagalur facility, we have utilized up to 120% also. And currently talking about the current AP plant, the utilization can again reach up to 100 and 105%. But currently assuming and giving the guidance ahead, the utilization may stand somewhere around 90-95% on the blended basis.
Understood. Got it. So in spite if you make more value added with general utilization in 90-95%, because some of the peers talk about 85-90% is the peak utilization if we go for value added. So that is the reason I'm asking the question, means whether you will face capacity constraint in the coming year FY27 and how you plan to go for it. Because if you plan expansion, it will take time. So how are you seeing, the future growth on MDF side?
So currently we have a capacity for making a value addition on this capacity itself. So for us currently, for next financial year also, the capacity is not remaining a concern for us.
Okay, got it. And what sort of price hike you have taken in this quarter, and do you have any further hike plans? And secondly, we are listening, some of the bigger players are getting more aggressive on the pricing side. So how you see it?
So we given guidance of 5% price hike in the last quarter Concall, but somehow we were not able to take it. So currently the pricing and the utilization is at the pricings are at the same level, and currently the market is also accepting the same prices. So we are not seeing any price hike further at this moment.
Got it. And the hike you have taken was only in the lower grade, not all across all the grades. Is this understanding fair?
We tried to took price hike across all grades, but nothing was in we tried, but it didn't happen.
Okay. And when you expect, that possibly the industry can take a price hike, how long it is? Because we might have another dent on margin.
So first, if we talk about the price hike, currently we don't see any possibilities to take a price hike because of the new capacities coming. And if you see, there are few more capacities which will be under the operation by next year as well. So we see, and that too from the new players. So we see a slightly difficult task to take a price hike.
Got it. By how much capacity is coming by the new player, and can you please tell which player you are talking about?
So there is a company called Elixir which is coming up in Madhya Pradesh. I don't know the rated capacity, what plant he has taken. Then there is an M5 which is coming up in Kerala, and there are Action Tesa is coming up with its new capacity, and there are 2-3 more unorganized players coming with the new capacity as well.
So any sense what would be the capacity addition for this and next year for the industry?
You can just, I can get back to you with this question once I have the right information in hand.
Understood. Got it. One last question from my side, this resin price which has increased. So how you see this impacting the margin?
So if we see as a overall impact, so it was an impact of current 1 to 1.5%. But the threat was about the supply not coming in even at the higher price of raw material paying. So that was the bigger threat. But now it is stabilizing. So, but the raw material pricing would remain same, and it will be a high price of 1 to 1.5%.
So you are saying because of higher resin prices, EBITDA margin will be impacted by 100 to 150 bps. And that is fully factored in Q2, or we'll see that impact in Q3 also now?
No, you will see the same resin prices for Q3 as well.
So whatever the impact of higher resin is there, that is already factored in Q2. So because of increase in resin prices, margin of Q3 won't be impacted, at least sequentially. Right?
Yes.
Okay, that is helpful. Thank you so much.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Deep Gandhi from iThought PMS. Please go ahead.
Yeah, hi, so good afternoon. So the first question is on the laminate side. So I think the initial understanding was that the additional revenue from the jumbo plant, both the phases, was 300 crores also according to the press release. But now I think you mentioned 150, 175 crores. So can you clarify this?
See, I think you are referring to the announcement which was saying, the total expansion in terms of jumbo, where there are two phases. And when we are saying a total turnover of 250 or 70, that means on the first year, suppose when we start the production of phase 1 and phase 2, and once it is stabilized in the first year, then total laminate segment will have a revenue of around 250 to 270 crore. If you consider jumbo, new project optimum capacity, then after considering both the phases and optimum capacity, then it can cross 200 crore.
Sure. So broadly, you meant that 200 crores will be from jumbo business and 100 crores will be the base laminate business, right? Whenever you reach 300 crores total top line.
So the first year, when we talk optimal capacity of jumbo project with both the phases implemented, then the whole laminate segments can go up to 450 to 500 crores in the next 2 to 3 years.
Sure. So say at 400, 450 crores, what will be the contribution of the jumbo business?
Okay. Now, the current EBITDA margin is in the range of 10% as of now, and the jumbo will have around 14 to 16%. So I think if you consider a 400 crore turnover, then 50/50, then the blended margin should be in the range of 12 to 13% at least. It can be more.
Okay. So I actually meant when you reach 400 crores top line, 2 to 3 years down the line, what will be the share of the jumbo business at that point of time?
So jumbo business would be contributing somewhere around 150 crores to 120 to 150 crores.
Okay. Even at 400 crores, 2, 3 years down the line when you reach peak utilization?
No, so this is just about the phase 1. Phase 1. When we talk about jumbo, total capacity what we have newly installed can go up to another 240 to 250 crores. So altogether, if we put, then the revenues would be somewhere around 400 to 500 crores.
Okay. So you mean only about the jumbo business now, right? Or you are also including the traditional laminates business?
No, both laminate business put together. So if you talk about percentage of new like jumbo and the existing one, the revenues would be 50-50%. And when you talk about just jumbo laminate, phase 1 and phase 2 put together, it will be somewhere around 240 crores to 250 crores.
Sure. That is helpful. So second is trying to understand more about the export orders which you've talked about in the press release. So can you quantify out of the total capacity which you are setting up, both the phases put together, how much of it is booked now through export orders which you would have received?
So if I need to calculate that how much percentage it is booked, but we have an assured orders from few of the countries which are roughly standing to somewhere around 105 containers. But I need to calculate in terms of capacity because there are too many thicknesses involved. And as you know that laminate has too many different categories of products. So the output of the production at the same time, some of the time may increase or some of the time may decrease. So actual we need to calculate it out and we can reach out to you with the question.
Sure. If you don't have the numbers in terms of volumes, but say when you reach 200 to 50 crores of peak revenue, any idea how much of that revenue visibility you already have based on the orders you have received? If you have the numbers for that will also help.
So for Q3 and Q4, our estimated export from the jumbo business would be somewhere around 25 to 30 crores.
Okay.
Because we just have got the certifications in the end of mid-September. So now we have started executing the trial orders with the customer. So the cycle is a bit long because the delivery time to the countries where we are exporting is also longer.
Sure. So I was actually asking more about, say, for next 2-3 years when you reach 200 to 50 crores revenue in the jumbo business, how much of that is already booked? Do you have the numbers for that based on the orders you have received?
No, it is too early to comment on that because as I told you that we have already started producing a trial orders for the customers, and once the shipments BG is there, then we can talk about the next order. So, and the delivery time typically for this is roughly more than 45 days once it is out on the port. So still we have started exporting as a first orders to our customers for the countries where the certification is required. But as I have commented earlier in my speech, like Russia, we have an order of, I think, 15 to 20% of the capacity, which we already have been started exporting it, where the certifications is not required.
Sure. So last question from my side. So the laminates EBITDA margins which are impacted this quarter, 8%. So is it only because of the raw material price increase, or are there also some upfront expenses which you would have done for the new plant commissioning?
Yes. I think if you see last quarter, the EBITDA margin of laminate was in the range of 9.7, 9.8%. As against that, this quarter, the segmental, I think, the EBITDA margin is around 7.7. This is mainly because of two, three reasons. One is like, as you rightly pointed out, the couple of expense which has already started incurring in terms of jumbo. So that impact, if we remove, then the actual existing margin is in the range of 9.4%. As against that, there are small other expenses like the areas of increment which has been affected in this particular quarter. And thirdly, again, there is a product mix which also matters the margin also. So all put together, the difference in margin of 2 to 3% is because of this. But once I think we start the normal dispatch and production in jumbo, I think this margin will again regain the same level of around 10%.
Okay. Sure. So that is helpful. I'll join back in the queue if I have more questions. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Madhur Rathi from Counter Cyclical Investment. Please go ahead.
Sir, thank you for the opportunity. Sir, I wanted to understand with what time lag do we pass on price, raw material price increase or decrease to our customers?
So currently, we have not taken, not passed the price hike to customers in MDF or laminate industry. Currently, the pricings are going on as of the requirement of the market, and we don't see a MDF price hike happening soon.
Got it. Sir, I'm relatively new to the company, sir. So on the MDF business, it's more of a B2B business, sir. So should it look at from a EBITDA per metric ton perspective or a EBITDA margin perspective?
So we consider it not metric ton, we consider it as a CBM, so it's a cubic meter margins what we see.
Got it. Sir, so I'm trying to understand, sir, with the wood supply. Sir, so what percentage of the MDF would be from the wood? What percentage of the raw material is wood? So this 45% gross margin that we are doing. So what percentage would be wood cost and the resin and all other costs?
So if we consider on the pricing point of size, so the wood would be somewhere standing at 27% of the cost, and resin would be somewhere around 21%.
Got it. Sir, so when with wood supply coming in, sir, so how should we see our EBITDA per SCM or EBITDA margin going forward? Can we expect to maintain, sir, and on a steady state basis, what kind of EBITDA per SCM can we expect from the MDF business?
So currently the EBITDA margin, what we see, we are currently assuming that as a EBITDA margin for Q3 and Q4.
Right. But sir, if I look at a MDF segment from a 2 to 3 year perspective, with wood prices declining, so from that perspective, I'm trying to understand, should we look at still from EBITDA per cubic meter or EBITDA margin? How should we look at it, and what can be the steady state number for this figure?
See, I would rather say that in terms of both way you can just calculate. One is like, as you rightly said, in terms of per CBM also we can say. So, starting with the realization, but then the realization is a subjective matter where we would not prefer. We generally consider the percentage. So, as Rushil bhai said that as of now we are at around 11% EBITDA.
And coming back to your question that wood and everything, so it's a supply and demand ratio, right? When the industry comes, new industry comes, there is a higher demand in the market. Once the agroforestry is stabilized, or I say when the cycle is there of the crop cutting, like 3 years or 5 years, according to the state, at that point of time when the supply is more, the pricing may go down. But at the same point of time, new industries jumping in may take the demand, the extra supply over there at the same pricing as well. So currently we don't see, it may get a dip, but I don't know exactly for the Q4 what will be the sense. But currently we see the stable wood prices as of now for the Q3 as well.
So in short, I think we are just tracking EBITDA margin in terms of percentage rather than per CBM. Because as he said, Rushil said, the realization may vary quarter on quarter. So I think it may not have the right base. So generally we consider the percentage as a right, I think, measurement.
Okay, sir. So, all the best.
Sorry, can you repeat? We don't get you.
No, sir. Thank you so much, sir. My question got cleared. So thank you so much and all the best.
Thank you.
Thank you. The next question comes from the line of Rahil from Sapphire Capital. Please go ahead.
Hi, sir. Good evening. Can you hear me?
Yes, sir.
So, in the Q1 call, you had said, I believe, in terms of revenue guidance, you had said 1,000 crores you expect in FY26 with like 70% utilization of the jumbo facility. But now I don't think you're expecting the jumbo facility to contribute at those utilization levels, correct? So now going ahead, can you just like give a revised outlook when it comes to the overall business combined for the whole year?
So currently, as you rightly say that we give a guidance for the 1,000 crore plus, but we see still 970 crores of top line expected to be in the year ended of financial year 2026.
How much? 970?
Yeah. As
Okay.
we have started our operations from Singapore office as well, so Singapore office will also contribute in terms of sales from for that. So we still see ourselves as standing at 970 crores approximately at the year end.
And with what kind of overall margins, EBITDA margins?
At the percentage of somewhere around 10 to 12%.
10 to 12%. Okay. And considering the new capacity in jumbo ramping up, any sort of like idea for the next financial year? What you have penciled in terms of your expectations for overall revenue and margins? A rough idea.
Yes, I think the overall turnover which we were expecting the last quarter around 1,000, which we are now giving a guidance of 970, which will include on one side the additional turnover from jumbo, and secondly, as Rushil bhai just suggested, that we are just starting the operations at Singapore also. So both together, we are just targeting to have a total revenue of around 970. And here margin-wise, I think whatever margins we have given in terms of percentage, that is around 11%, which we will maintain. Okay.
So that was for FY26. You've cleared. I'm asking for FY27.
Okay. FY27, additional turnover of jumbo would be, so, see, as of now, we are targeting around 30-40 crore turnover from this financial year. As against that, next financial year, we can expect at least 100 crore turnover from Jumbo and additional turnover of Singapore also. So approximately, I think we can expect 1,100 or 1,100 plus overall turnover, including everything.
1,100 including everything. This Singapore business, can you give more details? So you're saying additional from Singapore. So how much this year it will contribute and how much next year?
Exact details I think we'll be able to give next quarter only. It has just started. So the basic purpose of starting this, operations at Singapore is like we already have operations and the sales in laminate around 60% export, out of which we have two main territory. One is Middle East and second is Far East. Now we want to, focus into Far East area where we want to reduce the response time at that couple of countries. And secondly, we want to increase the volume of business at that particular location. So on one side, we'll have operations, the liaison office and everything will start immediately. And then we'll start, increasing the volume also from this location.
So is it fair to say in FY27 next year, once Jumbo will ramp up to 100 crores and plus, our margins can be 12% plus EBITDA?
Yes, yes.
We can do that, right? Oh, okay. And okay, sir. Thank you. Thank you so much and all the best to you.
Okay, thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to Rushil Decor for closing comments.
Thank you all for taking the time and joining us today and for your continued interest in Rushil Decor. As we continue to navigate opportunities ahead, we will remain committed for achieving our strategic objectives and delivering consistent value to our stakeholders. For any other further questions, please reach out our investor relation team at Churchgate Partners. Thank you once again.
On behalf of Asian Market Securities, that concludes this conference. Thank you for joining us and you may now disconnect your lines.